And joining us now to take a look at the market trade for Thursday's action, John Heinberg, Total Farm Marketing, is stepping in to join us here today. John, good to catch up with you again, sir. Hope you're having a good week.
Yeah, it's been a good week so far. We're looking forward to keyword looking forward to, I guess, tomorrow's USDA numbers. See how the market handles that. Reset the goalposts, and then we can focus on what we got over the next few weeks here in terms of this crop developing and weather.
Yeah, and thinking ahead to Friday's USDA report, John. Obviously, I feel like traders really kind of got one eye on that, but also watching maybe some fund money come back into the markets on Thursday. It felt like, and I posed this question earlier to someone. I said, "Do you think we'll see any position squaring ahead of tomorrow's report, ahead of Friday's numbers?" Maybe this was some position squaring because we've sold off a bunch. I just wonder your take on that here ahead of Friday's numbers with the green on the screen we saw pretty much across the board on Thursday.
Yeah, a real solid day in the grain markets and even in the livestock, with the exception of feeders. And considering corn was firmer and feeders only losing a little bit after the good week and good build we've had there, it looks encouraging to me as well. But again, we're probably with the short-term technicals in terms of some of these grain markets, especially corn, beans, and wheat, have kind of turned a little bit friendly to the point. If I'm a speculator, I'm looking at some key chart things in terms of moving averages that we're crossing through, buy signals, and we're probably seeing a little money come into that. We'll have to see. The funds did push their length to the negative side here pretty aggressively in terms of getting down on those corn positions, getting negative on wheat, tightening up those bean positions. That they can square up some of those shorts that they brought in. It feels like maybe we could push a little bit more yet tomorrow. Wouldn't shock me. We could close at some really key spots with some good, decent holds today at the end of the day. That maybe we get a little more strength overnight. But then, then we'll see what happens when that report comes. Get a little bit cautious on things here, especially when you've rallied into a report that's going to have a pretty good chance of maybe having some big volatility tomorrow. So I expect it to be a pretty choppy day going into those numbers, and then we'll see what the numbers are and digest them and watch things kind of fall out where they do. And this time of year makes me especially cautious just because of where we are in the window in terms of how prices typically move.
Well, and we're battling a weather market that is top of mind here with producers. We're watching maybe a shrinking crop in the Western Corn Belt. Some of the private estimates that are coming out now, the DTN digital yield numbers are out and showing lower. I mean, there's just a lot of things going on that side that we're watching the weather, and then as you mentioned, just watching these markets in this August report, which I think typically with the USDA's August numbers, they can be volatile. We could see some changes. But one has to wonder, what will we see? You're thinking, okay, will we see any change to the yield estimates to acreage? What will we see globally? I mean, there's some talk about Europe's crop coming down. So it feels like that there are a lot of numbers that are potentially up in the air with Friday's report.
Yeah, basically, it just kind of summarizes what we've been dealing with all year. Arrows pointing in different directions and trying to figure out which one's going to be the dominant number or the dominant news item that day. You talk about that Europe crop. We're going to have to see what happens in terms of where the USDA is compared to some of the private estimates. One group was 10 million metric tons lower, actually the lowest estimate for that European corn crop in 15 years. So that tells you obviously there was some issues there. And the fact that we've seen a little bit of export business pop up here for Europe the last week or so also kind of tells me that there's some concerns by end users there for supplies as well. So that'll be a number we'll watch tomorrow, see if there's any additional adjustments on those South American numbers. Then obviously too, we got to see what happens here. Resurvey of acres for that northern tier. Do we get a yield move tomorrow? Now, again, this report's based off of producer surveys, weather models, computer analysis of the fields. This is not boots on the ground measurements yet. So that's a number that makes me a little cautious how the USDA handles things in terms of their process. So there's just a lot of moving parts here. Again, the biggest thing for producers, the thing is I was stressing talking to guys this last couple of days, is there's still some good value out there. Make sure you're taking advantage of it. We've seen beans rally $1 off the most recent low, corn, 50, 60 cents, probably a good window to make a cash sale or two if you're a little light. Make sure you got some puts underneath. I'd rather have that price flexibility to the upside than wondering what happened if the market were to roll over.
Yeah, it all comes down to risk management. You hit where I was going to go next pretty perfectly there. So let's move on a little bit. Inflation data this week, John. We've gotten showing moderation. It feels like that's been pretty supportive overall between the CPI Wednesday and the PPI on Thursday. Stocks, energies, liking the news. Your thoughts with some of that inflation data and how that's playing into the trade this week?
The question there is obviously, still at 8.5% year over year, down from where we were last month. So maybe we've hit our peak there. Obviously, the energy price move has been the biggest factor in all those numbers. Again, but we still have issues. It's not, we're not out of the woods here in that regard. Obviously, you're seeing the reaction in the stock market because of the thought maybe the Fed can soften a little bit on their interest rates hikes that they're forecasting. Again, we'll see. I mean, obviously, we're not given the all clear sound in that regard. We'll have to continue to watch the labor market. There is some chatter out there of some companies laying off people, and maybe that strong labor market starts getting a little shaky here, as some of these price impacts come into play. So there's things that I'm still watching there, but that did have a break on that US dollar while we saw those equity markets move. And I think that helped out the grain markets as well. We got the dollar trading at its lowest level in a month, under some key moving average support, or under in this market, which now is going to act as new resistance. Maybe we got a little bit of a downtrend in the dollar, and I think that's come to play in what we've seen the wheat market try to maybe climb out of its hole, and also just a little bit of the buying strength that's also there in the corn and the soybean market as well.
John, livestock trade. We saw fairly decent action on the day. It was a little more mixed in the livestock sector, but overall, assessing weekly export sales, which were okay, I guess. Just looking at the numbers. But you take a look at this livestock market. Any thoughts there as we've worked through this week? Anything changed in your perspective?
I'm still thinking the realization that the animals are not there is definitely starting to hit this market. Let's go cattle first. A little more strength in cash trade this week. Looking at that choice select spread, $25, $26 difference between the two, tells me the lots are pretty current. Again, we got packers bidding up, trying to find that choice quality product. The biggest thing that's been helping there is the demand continues to stay strong. We got the July export numbers, again, another strong month, tracking well above last year's record pace level. So that's encouraging to see that we're still moving product there. Then on top of that, the imports are down 15% on the, for that month of July. That's a reflection of the fact that we got a lot of cows going into slaughter, filling that ground beef need that we usually bring in through the export side. So again, this cattle market looks extremely friendly. Throw in there managed money and the money flow and open interest growing, coming off of a 6-year low. That just tells me there's some room to go here, and this cattle market can go. But now look at it in the longer term view of things. We're looking at historically high prices. Make sure, again, price flexibility is the key. Start putting some put floors underneath this market in case the recession chatter does explode again and this market rolls over. We want to make sure we got something underneath, because next thing you know, we're back to 140 and everybody's wondering what happened, and you don't have something in play. Don't spend a lot, but just put those safety valve puts underneath here. Keep that price flexibility with your cattle going forward, given those tight supplies. You go over into that hog market. Yesterday's inflation data out of China was very interesting to see. Pork prices last month up 20%. So that's a big jump. We saw them active in the export market 2 weeks ago. They picked up a little bit more pork here last week. And today's numbers as well. That's some of the reason we're seeing these hog numbers, these hog prices starting to climb, plus just that discount to the cash market with August coming off the books tomorrow. October, December, new contract highs and high closes today. Again, looks like we just got some good money flow out there. But like I just said, for cattle, don't forget about keeping some safety valve puts underneath this market, because livestock markets like to V in and V out, and we're getting a little overbought here in both those markets.
John, final thoughts for us real quick before I let you go. I appreciate you jumping in here for us today. Anything else you want to add?
Yeah, I mentioned it very briefly. Take a look at that wheat market. There's something kind of maybe building there. We're putting a round bottom in on the charts right now. Not, we're typically used to V bottoms where prices crash and then they explode higher, and you go from panic to euphoria in a couple days and relief in a couple days. This wheat market is, again, right now, we've broken through some key resistance levels yesterday. We traded firmer again today. It's just this point where this market's probably undervalued. Not saying we're going to take off and go running back to the highs again, but it's going to be one of those markets that were 5 cents forward, 3 cents back, and the next thing you know, over 3 weeks, we picked up another 50 cents. So just kind of keep an eye on that right now, and that could be a market that could help lead these greens higher, especially if that dollar index continues to soften. So it's just an interesting look on that chart. Now, I hope we don't get any negative surprises tomorrow that kind of break that thought process, but it looks like, at least right now, this wheat market maybe finally getting to a point where we got a little bit of a floor.
Fantastic stuff. And I know if producers have questions, need advice, totalfarmmarketing.com is a great place to start, or give you guys a phone call, can't they, John?
Sure, love chat with them anytime. Give us a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And like you mentioned, don't forget about that website, totalfarmmarketing.com. A lot of great information for our producers out there.
John, appreciate it. Thanks for jumping in today. Have a great weekend, sir. We'll talk to you soon.
Sounds good. Have a good weekend.
John Heinberg with Total Farm Marketing joining us today here on Market Talk. That's going to do it for the show. I'm your host, Jesse Allen. Have a great afternoon.